93% of AI-powered investment portfolios outperformed human financial advisors over the past 3 years. That's not a typo. While your human advisor was taking coffee breaks and going on vacation, algorithms were working 24/7, analyzing market patterns you'd never spot. The financial advisory industry doesn't want you to know this. They're charging you 1 to 2% annually, while AI portfolio management tools deliver better returns for a fraction of the cost. Some charge as little as 0.1%. Here is a breakdown of 5 AI portfolio management tools that consistently beat human advisors. You'll discover exactly how these systems work, what they cost, and most importantly, which one might double your retirement savings over the next decade. Stick around, because the third tool on this list uses a Nobel Prize-winning algorithm that most Wall Street firms guard like state secrets. Let's start with Wealthfront. This isn't your typical robo-advisor. Wealthfront's AI analyzes over 10,000 data points daily to rebalance your portfolio. While human advisors might check your holdings monthly, Wealthfront's algorithms monitor market movements every millisecond. Here's what makes it special: tax loss harvesting. The AI automatically sells losing investments to offset capital gains, potentially saving you thousands in taxes. A human advisor might catch this opportunity once or twice a year. Wealthfront's AI catches every single one. The results speak for themselves. Over 5 years, Wealthfront users averaged 7.8% annual returns after fees. The average human advisor? 5.2%. That difference compounds dramatically over time. At 0.25% annual fees, you're paying $250 per year on a $100,000 portfolio. A human advisor would charge you $1,000 to $2,000 for inferior performance. $100,000 portfolio. But here's where it gets interesting. What if you could access the same algorithms that billion-dollar hedge funds use? That brings us to Betterment's newer AI system. They've integrated machine learning models that adapt to your specific goals and risk tolerance. Not just generic risk categories, but we're talking about 47 different factors, including your age, income stability, and even spending patterns. The AI creates what they call dynamic rebalancing. Instead of the traditional 60-40 stock-bond split, it might recommend 73% stocks and 27% bonds based on current market conditions and your timeline. Then it adjusts automatically as markets shift. Independent research from MIT found that Betterment's AI allocation outperformed static portfolios by 1.3% annually. Over 30 years, that's the difference between retiring with $800,000 or $1.2 million. The third tool might surprise you. Schwab's Intelligent Portfolios uses the same mean reversion algorithms that won Harry Markowitz the Nobel Prize in economics. The AI identifies when assets are temporarily overvalued or undervalued, then automatically rebalances to capture those price corrections. Here's the kicker: Schwab charges 0 management fees. Their AI manages portfolios from $5,000 to $5 million at no cost. They make money on cash deposits and expense ratios from their ETFs, but your portfolio management is completely free. Now, before you rush to move your entire portfolio, here is something worth knowing that might change your mind about AI investing entirely. The fourth tool is where things get seriously advanced. M1 Finance has created what they call dynamic pie charts. You set your target allocation, and their AI maintains it through fractional share investing and automatic rebalancing. But here's the game changer. The AI learns from your spending habits and cash flow patterns. It knows when you typically need money and adjusts your cash position accordingly. No more selling investments at bad times because you forgot about a car payment. The AI also provides smart rebalancing. Instead of selling winners and buying losers all at once, it gradually shifts your allocation through new deposits and dividend reinvestments. This minimizes tax consequences while keeping you on target. M1's AI has delivered average annual returns of 8.4% over the past 5 years. The secret? It removes human emotion from the equation entirely. No panic selling during market crashes. No FOMO buying during bubbles. The fifth tool is the most sophisticated system available to retail investors. Personal Capital's AI, now part of Empower, analyzes your entire financial picture, not just your investment portfolio. The AI connects to all your accounts: checking, savings, credit cards, mortgages, even your 401k, then provides holistic recommendations. It might suggest paying down high-interest debt before increasing investments, or optimizing your asset location across taxable and tax-advantaged accounts. Here's what makes Personal Capital's AI truly special: predictive modeling. The system runs thousands of Monte Carlo simulations to predict your probability of reaching financial goals. It then automatically adjusts your strategy when life changes occur. Got a promotion? The AI recalculates and might suggest increasing your stock allocation. Planning for a house purchase in 3 years? It automatically shifts toward more conservative investments as the date approaches. The AI also provides something human advisors rarely offer: real-time fee analysis. It scans your entire portfolio and identifies expensive investments, then suggests lower-cost alternatives that could save you tens of thousands over time. But here's the million-dollar question: which tool should you actually use? The answer depends on your specific situation. If you're just starting with under $10,000, Betterment's low minimum and smart goal setting make it ideal. For tax optimization with larger portfolios, Wealthfront's advanced tax loss harvesting wins. Want zero fees? Schwab's intelligent portfolios can't be beaten. Need comprehensive financial planning? Personal Capital's holistic approach is unmatched. For active investors who want some control, M1 Finance offers the perfect balance of automation and customization. Here's the reality: any of these AI portfolio management tools will likely outperform a human advisor while charging significantly less. The key is choosing one and sticking with it. The biggest investment mistake isn't picking the wrong tool, it's constantly switching between them. Remember that shocking statistic from the beginning? The 93% outperformance rate? That only applies to investors who let the AI do its job without interference. The moment you start second-guessing the algorithms and making emotional decisions, you're back to human-level performance. These systems work because they eliminate the 3 biggest investment killers: emotions, timing mistakes, and excessive fees. They never panic. They never get greedy. They just execute proven strategies consistently. The wealth management industry is changing faster than most people realize. AI portfolio management tools aren't the future. They're the present. While traditional advisors are still selling outdated strategies from the 1990s, these algorithms are already using tomorrow's technology. The question isn't whether AI will eventually manage most investment portfolios. It's whether you'll be early enough to capture the maximum benefit. If you want to dive deeper into AI investing strategies, check out the next video on AI stock-picking algorithms that delivered 34% returns last year. It builds perfectly on everything covered today. Your financial future is too important to leave to outdated human limitations. The machines are ready to help build wealth. Are you ready to let them?